Now, if you would love to catch a trade like this, a trade like this, or a trade like this, then watch this video to the end, as I'll be breaking down the step-by-step rules for entering this particular type of trades, how to get the entries, and the specific rules to getting placed on these trades. Now, I'm first of all going to delete all of this stuff right now. Gone. And I'm going to remove all the whole indicators so you guys can be able to follow along on how I add these indicators. Now, first of all, I'm going to click on the indicators tab on trading view. Next, I'm going to search the ALMA indicator, or the Arnold Legos moving average. I will click on it, and then we're just going to make some modifications to it. I'm going to click on the settings, and then I'll go to the style. Let's just give it a white line. And actually, let's make it a little bit bold so we can see it more clearly. And we're just going to go to the input, and we're going to change the input period to 30, and then click on OK. Now we're done with that. The next indicator we're going to be adding is the volume indicator. In our case, the normalized volume indicator. Go on your trading view, type normalized volume this way, and select this one by Sehon. Click on it. Perfect. Now it comes default with colors, changing the candles and all of this fun stuff, but we actually don't want it to change that, even though it looks good. We want to know when. I'll tell you guys why we don't need the colors when I start explaining. I'm going to click on the settings on this, and I'm going to click on bar color to turn that off. Now you can see my candles are looking normal. Okay. Now you're going to be wondering, how did I get my entries with just these two simple indicators? Now, this is a very simple strategy, and I want you guys at the end of this video to make it your own by adding more indicators and by adding more rules in order to get yourself up to the level that we are actually trading right now. Okay, beautiful. Now, before we start, those of you that are already profitable from the videos I've been making and the concepts I've been teaching, if you want to join a good prop firm, and you're not in the US, if you want to join a good prop firm that's actually going to help you get funded and actually not keep or withhold your money, then you guys can go with the Fivers. I'm going to be leaving a link in my description, and also I'm going to be leaving a link in my comment section, the top comment section. So check that out if you want to get funded. If you're trying to get a trustworthy prop firm, I heavily recommend them. Now to the signals. The signal is very simple. When price is below the candles this way, okay, you're going to wait for the price to close above, just like this place. Okay, just like this perfect entry right here. And you're going to put your entry at the top of the candle. You're going to wait for the top of the candle to get broken, to get your entry in, and your stop loss will be at the low of the candle. Yes, I know it's a loss. I never promised you guys 100% win rate. I only told you guys we're going to be getting good entries that's going to make us a lot of money. Not financial advice, as this video is just for educational purposes only. Now, right here is another entry. The candle closed above here, and then we're going to check for the entries. Now, for every single entry you're going to be taking, the entry has to be at the high of the candle, and then the stop loss has to be under the candle at the low of the candle, so you don't have any bigger stop loss, right? Now, the next thing you need to do when taking a trade is you have to check these bars here. You can see this indicator is our volume indicator. You can only take a trade when the volume on the particular candle is not red. For example, the volume right here is yellow, so we are good to go, and this trade is good to go, right? On this one, the volume right here is also yellow, which means we would have taken that loss. This one right here was good to go. And then I have taught many other concepts like exit indicators on this channel, so you can use exit indicators to get out of this market, trading stocks, whatever you see fit. And when you get this kind of moves, this is exactly what you need to do, right? So very simple entry and exit criteria. Let's move on to the next signal we have here. See, price was below the moving average this way. Price closed above the moving average right there. Okay, and check what the volume is saying right now. The volume is red. Even though we would have gotten a good trade, the volume is red, which signals low volume. Now sometimes you're gonna miss winning trades because of the volume is not confirming it. It's okay. You'll get a better trade later. Okay, now this is another entry indicator. This green indicator right here, this green candle which closed above, is an entry. Now we are gonna put our entry at the top here and put our stop loss under the candle. Okay, In this case, if you held long enough, you would have gotten your stop loss hit. That is why we use exit indicators. In this video, I'm just checking for entries, but let's just record it as a loss, just for those skeptical ones that do not believe what we do here. Now, I know we would have gotten a sell right here, but you have to use a bigger moving average, filter out losses like this. Or sometimes, if you actually do what I say, you put your entry at the low of the candle. This is a selling example. Entry is going to be at the low of the candle. Let me delete this loss, guys. I agree. We all accepted it to be a loss. Imagine you're selling the market right there. Let me just zoom in on it so you guys can see it better. Stop loss has to be at the high of the candle. At the high of the candle. Now, this actually ran for, even though it looks like nothing, it ran for a 1 to 1.47, and you would have broken even this trade depending on your rules. It wasn't that bad of an entry, but I believe the trend generally was going up in the long run. So I don't expect you to be taking those type of trades. That's why I said you should make the strategy your own by adding other stuff on it. Okay. Now, this next buy here were actually a bad trade, because the price, because the volume at this point was not enough. We have red, meaning we have low volume, and that wasn't really a very great trade. Price went all the way up here, gave us a buy right here, and guess what? Our volume said we could go, even though it looks like a losing trade. Now, if we check the height of the both candles, we actually got tapped in, because I told you guys the entry has to be at the high of the candle. We actually got tapped into this trade. Yes, AUD SZD, the low, we actually took the loss on that particular trade. Now, you will notice that the trend started going down, so your indicator should hopefully have caught up with the current trend, which is the downtrend. Now, which entry did we get? Okay, which entry did we get? You can see the entry right here. Price was above the moving average. The price closed down here. Okay, good entry. Was there volume on that candle? Yes, on that particular candle that closed down, we have the yellow volume indicator. So it means that we actually have the permission to get into that trade. So just as usual, entry has to be at the low of the candle. Stop loss has to be at the high of the candle. Why we do this is ridiculous risk to reward. And depending on your exit indicator, you got out. And if you wanted to use ratios, maybe 1 to 2, 1 to 3, which I do not advise, you could also do that and you probably hit your take profits. Now, just for the bonus, let's go back. So it doesn't look like we just cherry pick anything here. Let's just go back. Let's start somewhere around here, so that we can look at more examples. So yeah, good. Now the trend here was what? Downtrend. A very, very good downtrend. So you probably be looking for selling opportunities. Look at one selling opportunity here. The candle was red, so that wasn't an entry. This is another selling opportunity here. The candle was red, that was an entry. So we actually click that entry at the low. Stop loss has to be at the high of the candle, just like this. And you take your profits wherever you see fit. Trend is still down. Maybe trend started to pivot around this zone because it wasn't really showing a clear direction. That is why you have to make use of other indicators to filter the particular trend that you are getting into. So if you were trying to sell this market, it was above here, then maybe on this particular candle it was below. So if you sold here also, obviously you are not considering the trend. You don't have any factor to factor in the trend. Stop loss will be at the high, just this way. You'd have gotten a break even if you broke even on time. And then let's look at the next trade. The next trade here looks like it gave us a win. Stop loss has to be at the low of the candle, just this way. You might have gotten a stop loss hit on this one. I don't know. You guys have to just zoom in, and I just want to be very, very transparent in these videos. This one looks like, let's just assume we took a stop loss on this particular trade, right? Okay, let's just assume we got stopped out on this trade. Good. But what happened later? We got another entry long to go long, and then stop loss have to be at the low of the candle, just this way. And what happened? You recovered multiple times of your loss that was taken. That's including other little wins you would have been getting from these markets, and so on and so forth. Look at this bad area that was chopping. Can you guys notice anything phenomenal? You would see that the volume at these zones are extremely low. extremely low volumes, which mean that they are not actually great times to be trading the markets. But once the juice was back on, we actually got entered into these trades and we were able to capture the up move that happened in this market. So in a nutshell, you can use moving averages. You have to find those perfect, good looking moving averages that are going to help you get into phenomenal trades. Wait for the price to cross either above or below it to get your entries, and then check your volume indicators and add other extra indicators. Now, what other indicators do I mean? You need to have a confirmation indicator, which is going to be any indicator that tells you about the trend, a secondary confirmation indicator, an exit indicator, the volume indicator, which I've already given to you guys, a baseline indicator, and so on. These are all things you have to apply to start getting better entries and better exit points in the market and start making that sweet profits. Not financial advice though. Hopefully you guys can watch through my channel and learn about these concepts. Subscribe if you're not already subscribed. Leave a like on this video and let us know the strategy you are applying in the comment section. I love you guys. Stay blessed and stay fiery profits. Good day.